It is nearing the end of the second quarter of 2020, and this is when I do the bulk of my investing. So today I want to talk about the core of my investment strategy, which is dollar cost averaging into index fund ETFs on a quarterly basis while maintaining the balance of my allocations. Now, first, I want to start with what that even means. Some people are newer to investing, so you probably aren't even sure if I was just speaking English. So I want to dive into a little bit of that information, and then I want to actually invest about $2,000 of my own money that I saved up over the past quarter and show you what I'm putting that money into. And stick around because I am going to highlight my favorite 4 securities for beginners. These are the ones that I recommended to my own mother when she said she wanted to start investing outside of her regular retirement investments. This information is going to be great for beginners who want to start investing, as well as for those that already are investing but want to see someone else's approach and what they invest in. So there's going to be a little bit of something for everyone, so please stick around. And I'm going to start off with the best investing tip that I could ever give you. It's going to make you rich. That tip is subscribe to my channel. Please like this video and subscribe. I mean, I'm wearing a pinstripe blazer, so you know that I'm important and I know what I'm talking about. And subscribing is the best way to get some more tips, learn something new maybe, or just stay motivated, right? Surround yourself with the topic that you want to learn more about and stay motivated to achieve. So please subscribe. It really helps support the channel. Do you know how to read a company's financial statements? How about calculating their intrinsic value? Not the stock price of the company, but the actual intrinsic value of the company. Do you have an extra 8 hours a week to do all this research plus more to understand what's going on with the company that you want to invest in? To a lot of beginning investors, these tasks are incredibly intimidating. So I always recommend to start with index funds. When I talk about index funds, what it means is that you own a portion of several companies just in that one security that you hold. There are about 3 different terms you might hear in relation to this concept. The first one is mutual funds. And I learned a lot about mutual funds over the past couple years. It is the same concept of holding several different companies in that one mutual fund, but I didn't understand before the big difference are the fees. The average fees for a mutual fund are between 0.5% and 1%. Although when I looked into this, I was over 2% on my mutual fund. It doesn't seem like a big deal, but trust me, it adds up. If you're interested in seeing the impact of fees, comment down below and I will do a complete video summarizing some of the things I learned, which made me cash out of my position immediately. The reason the fees are so high for a mutual fund is that they are actively managed. There's someone assigned to that account to trade different securities to try to beat the market. Plenty of studies have been done to show that even the best investors on average do not beat the market. So why are you paying more and actually earning less than doing it yourself in an actual index fund? Now let's look at an index fund with Vanguard. You may be familiar with the term S&P 500. What this is 500 of the largest companies traded in the US. So when you own the S&P 500, you own a portion of 500 of the largest companies. Now I have my computer right here so I can actually show you what I'm looking at. So this right here is the Vanguard 500 Index Fund. The abbreviation or the ticker symbol, which we might be familiar with here, is VFIAX. So just as I said, I'm not lying to you, it's 500 of the US companies on the stock market. Now, what's important, I mentioned the mutual fund, the average fee is between 0.5 and 1%. Here you see it's 0.04%. It is much cheaper. It's not always how much money you make, it's how much money you keep. Index funds are great for that. The thing that I noticed with this one though is that the minimum investment is $3,000. So when I was a new investor, that really scared me off. I was thinking maybe index funds weren't for me. So what's nice is there is an ETF. An ETF is very similar. It trades more like a stock, if that makes sense. It's still the same that it has a ticker of VOO, but as I understand it, index funds trade at the end of the day versus ETFs you can trade anytime you want, kind of like you would a stock. It's just kind of a little bit easier for me. It's just like tracking the stock market. What's even better is the expense ratio is a little bit lower at 0.03%, and there's no minimum. Like I said, you just pay what the price is at that time. The great thing about index funds is the diversification. So especially right now with what we've seen going on in the market with coronavirus, we've seen the market go up, we've seen it go down and down some more. We've seen a lot of companies go bankrupt. If one of the companies in the S&P 500 goes bankrupt, there's 499 other companies that are picking up the slack for that company. So I'm a lot less worried. What's cool about this is you can see the 10 largest holdings, and a lot of these names you're gonna be familiar with. Maybe you really wanna own Apple stock. That's a really hot and popular stock. Well, if I own the S&P 500, I own a portion of it. Another intimidating factor for new investors is knowing exactly when to invest. We all have heard to buy low and sell high, but how do you know when it's low? What if it goes lower? When do you sell? What if it goes up higher and you miss the opportunity? These are all valid questions, but dollar cost averaging is a great thing to learn about to ease those fears. When you hear people talking about buying low, selling high, and timing the market, what they're talking about is trading, and even day trading, where people try to buy and sell within hours in order to make a profit. What I'm talking about and what I do is long-term investing. Now, when I started, I've mentioned before, I started by putting $30 per paycheck aside in a separate savings account. Then at the end of every quarter, I take what I had put aside and I invest in index funds. That's exactly what I'm doing today because it's the end of June or quarter two, so it's time to make my investments with all the money that I've saved up until now. What's great about this is I try to put the same amount aside every paycheck, but life happens and things fluctuate. Sometimes I'm able to put aside more than my direct deposit. Sometimes it's a little bit less, or I even have to pull from that savings account. So it's kind of like a little bit of an emergency fund in that way. And I found that this has really worked for me. All right, are you pumped up yet? If not, have another sip of wine and get excited because this is exciting stuff. Now, the other thing I mentioned was a balanced portfolio with my allocations. Which also sounds kind of like gibberish if you don't know what I'm talking about. So I have my blueprint set up. I know how much money I want in each segment. I know what Vanguard securities are within that segment. So when it comes to the end of June and I'm looking to do my quarter two investments, I update my balances in my spreadsheet. I see how much I have in each segment and where I need to put more money. Did that help? Here, let's try another visual. So this is how things are broken down, and I updated these balances at the close of market today so that we could get an accurate view. So we see that currently 34% of my entire portfolio are in index funds, in the VOO, VTI, VYM. Those are the three that I own that are within this segment that I call index funds, even though you could argue they're all really index funds. So I went a little bit crazy in March when the market fell. I put a lot more money in VOO and VYM. That's why it's higher. So I know that to stay allocated and stay balanced, I don't necessarily want to focus on this category. We see that REITs or real estate investment trusts are at 18% in total, and my goal is to be at 20. So I know that I want to put most of my money there because it's lowest compared to the others. I also want to focus on the international indexes. Again, those are companies that are purely outside of the US. No US companies are there. I also want to focus a little bit on emerging markets. These are a little bit more of my risky securities, but again, I want to focus on potential growth and focusing outside of the US. So emerging markets, I have that on there as well. Everything else is pretty well balanced. So I don't need to focus as much money in those categories, but I still might throw a couple of those in there today. All right, so we covered dollar cost averaging, we covered index funds, and we covered what it means to balance my allocations. Hopefully that was helpful. So now it's time to spend some money. Are you excited? I'm excited. I'm a little nervous. I gotta say, it's gonna be kind of interesting trying to figure out how to share my screen and do this as I'm making the purchases. So I wanna try really hard not to do something stupid like sharing my account number or my social security number or something insane like that. So we're really gonna see how this goes.